Welcome to Accounting with Madam Mombi. So today we are going to look at accounting for royalties. And to start with, we are going to define what is a royalty. A royalty is a periodic payment to the owner of a right or an asset. The owner of a right is called a landlord or the lessee. So a landlord has a right to a certain asset, gives permission to somebody else to use that right. That person to whom the right is given is called a tenant. And the royalty payable is either based on output or on the sales. Now, to explain this further, we can come to types of royalties. One of the royalties would result from mining, whereby if probably you have some minerals in your ground, but you do not have capability to mine them. You don't have the machines, the skills, the requirements, but the minerals are in your land. So as the owner of the land, you are the landlord, but you may give the right to the minerals to a company for them to mine. Once they mine, they are going to be paying you a royalty. The royalty will be based either on the output or on the sales from that land. So that is a mining royalty, where the tenant of a land has the right to mine or to the minerals, but has to pay the landlord a certain amount of money, which we are calling here the royalty. We can also have patent rights, where the manufacturer of an article has to pay the inventor some royalty. Also, we can have copyright royalties, where these are payments that are made by a producer or a publisher to the owner of either the music or the book respectively. So these are the type of royalties. So basically royalties result from a right to use an asset that does not belong to you. Therefore, you have to give the owner of the right an amount of money from the sales or from the output, which we are calling here royalty. So we have to define some terminologies that are used and accounting for royalties. One of them, we can start with royalties payable. So basically, royalty payable is computed based on the output. For example, if per ton of minerals, the landlord is supposed to receive maybe 100 shillings, let's say 100 shillings per ton of minerals that is mined. So if the tenant goes ahead and mines 50 tons, he has to multiply 50 tons multiplied by 100 shillings and therefore pay the landlord 5,000 shillings. That is what you're calling a royalty payable. It is the amount of money that has to be paid to the landlord, and it is computed based on the output or the sales. So again, to redo that example, we have said that, for example, if the tenant to whom the right is given mines 50 tons of minerals, he has to multiply that with the amount of royalty. Maybe it is 100 shillings per ton, and therefore pay the landlord 5,000 in 5,000 in form of royalty payable. So this is our first terminology called royalty payable. Our other terminology is minimum rent. Now, despite the fact that we have computed the royalty payable as I've explained, minimum rent is the minimum amount that the landlord can accept at any given period. It is also called the dead rent or the flat rent or the fixed rent. In this case, in our example, if the royalty payable says 5,000, the landlord has stipulated that the minimum amount he can accept is 10,000. Therefore, in that month or in that period, that means the tenant was not able to work hard enough to meet the minimum rent. So, in this example, let's say that the landlord has declared that the minimum rent that he can accept is 10,000. The tenant has to go back to his own pocket and fill in the amount between the 10,000, which is the minimum rent that the landlord can accept, and how much he has computed as the royalty payable. There seems to be a deficit. So a minimum rent is the least amount of money that a landlord can accept at any given time irrespective of the output or the sales by the tenant. So we say that this one is a negative incentive to work, whereby the tenant, knowing that he has to meet the minimum rent, he's forced to work harder because he does not want to go back to his own resources to fill up a deficit to pay the landlord. So that means it's a negative incentive towards working. So the next terminology is short working. Now, a short working is what I've just explained in the form of a deficit, whereby the royalty as computed, or the royalty payable as computed based on output, is less than the minimum rent. The landlord wants 10,000, but from the output, the only amount that would be payable to him as per calculations would be 5,000, which he cannot accept. Therefore, the tenant here has a deficit. He has to add from his own resources 5,000, which we are calling a short working. So a short working is simply a deficit. It is a deficit that occurs when the royalty payable is less than the minimum rent. Now, in the initial years of the agreement, before the tenant breaks even, he may find himself in a situation where he is not able to meet the minimum rent, maybe for the first 2 or 3 years. And therefore, all those periods is going to be having short workings. And in the future years, say once he is able to break even, he is able now to meet the minimum rent and also get a surplus. At a later date, he may negotiate with the landlord to be given something we call short working recoupment, where it is a right that is given now to the tenant that in future, once you're able to make more money, you can be able to recover the money that you lost in the past. What we mean by this is that probably after 2 years, if the tenant is able to manufacture or to get enough output, whereby now the royalty payable, let's say, is 50,000, he can request the landlord to recover the amounts that he lost in the initial stages of the agreement in form of short working. So a short working recoupment is a right that is given to the tenant to recover some of his short workings from the future or from the subsequent years. That right can either be restricted recoupment or it can be floating recoupment. So we are going to look at these two types of rights. So starting with the restricted recoupment is where upon commencement of the agreement, the right of recoupment is fixed for a certain period of time, that is maybe a number of years. For example, the landlord may tell the tenant, I'm only allowing you to recoup your short workings for the first 5 years. So after the 5th year, the right is over. If he makes any more short workings, he cannot recover them. He has to write them off. So a restricted right of recoupment hereby is where that the right is restricted to a period of time, like I've explained, maybe 5 years, 2 years, 3 years, and so on. So the other one would be a floating recoupment or an unrestricted right, where in the first case, if it is totally unrestricted, the tenant can recover any time during the agreement period. But it can also be fluctuating, where the short working of 1 year can be recovered in the next maybe 2 years. The short working of the second year can be recovered in the next 2 years. So it fluctuates so that short workings of 1 year can be recovered in the next 2 years. The second year recovered in the next 2 years, like that. So this floating recoupment allows the tenant to have more time to be able to recover his short workings in the future. So in this our question, to help us understand more about the terminologies that we have used and all those concepts, we have a question that says that fingers list a coal mine from hand at a minimum rent of shillings 75,000. To begin with here, fingers is a tenant and hand is the landlord. So the question continues, on which royalty fees are payable at shillings 5,000 per ton. there was a stipulation that short workings could only be recouped in the first 3 years of the lease. So that is a restricted right of recoupment, whereby we are only supposed to recover in the first 3 years of the lease. The output in the first 4 years of the lease were 8 tons, 13 tons, 21 tons, and 18 tons respectively. Required: show the entries to be made in the books of Finger Limited in the first 4 years, assuming the lease commenced on 1st January of 2017. So to be able to achieve or to be able to answer our question, we are first of all going to prepare what we call an analysis sheet, whereby the first column you are going to put the year. So we have 4 years here, that is from 2017. So we are told in 2017 the output was 8 tons, which we have here. The output was 8 tons. In the second year, it is 13 tons, which again we have here in 2018. In 2019, the output is 21 tons, like that. 2020, the output is 18 tons, as represented there. So the first thing we are going to compute is the royalties payable. So for all the figures of the output, we are going to multiply with 5,000. Why? Because we were told that the royalties payable is shillings 5,000 per ton, which is here. We are going to pay a royalty of shillings 5,000 per ton. So the royalties payable, we multiply with 5,000 per ton. So if you find that there 8 times 5,000 is going to give you 40,000. 13 times 5,000 is going to give you 65,000. 21 times 5,000 is going to give you 105. 18 times 5,000 is going to give you 90,000. Now, we have in our mind to remember that the minimum rent is 75,000. Again, that is given at the beginning of the question, that the minimum rent is 75,000. So we have to evaluate circumstances where either we had a short working or a surplus. That is why we are able to meet the minimum rent according to the royalties payable. Now, going back to the first year, if 40,000 is less than 75,000, that means we were not able to meet the minimum rent. So in that year, there was a short working. The short working shall be the difference between 75,000 and 40,000. Therefore, the short working is going to be 35,000. That is the amount of money that the tenant had to get from his own pocket to be able to cover the short working or the deficit. In the second year, while the minimum rent is 75,000, the royalty payable according to the production was 65,000. Again, another case of a short working. We were not able to meet the minimum rent. Therefore, we have a short working of 10,000. Now, in the third year, while the minimum rent is 75,000, the royalties payable was 105, meaning now we have a surplus. So you can see now it is recorded under the column for surplus. Meaning in that month we were able to do well. In that year, sorry, they were able to do well and they got a surplus. So the difference again, it is simply 105,000 minus 75, giving us a surplus of 30,000. In the fourth year, the same. 90,000 is more than 75,000, giving us a surplus of 15,000. Now, the landlord has given the tenant the right to recoup the short working, to recover the money that he has lost in the initial years, but the right is given up to the first 3 years. So here again it says that the short workings should only be recouped for the first 3 years. 3 years means 2017, 18, and 19. So the last year when the tenant can recover is 2019. Now, in the first 2 years, there were short workings. There is no surplus, meaning they was not able to recover anything for the first 2 years. But in the third year, we have a surplus. We made 30,000 more than the minimum rent. This is what we are going to recoup or recover. So instead of paying the landlord 105,000, we are going to pay him just merely the minimum rent of 75,000. 30,000 and recoup or recover 30,000. So among the amount of short workings, the total here being 35 plus 10, which is 45, this is a short working carried down. We are able to recover 30,000 of that money. So the money we have lost in the initial years, that is 35 plus 10, giving us here 45 according to the short workings carried down. We are going to recover out of it 30,000, but now the remaining 15,000 is irrecoverable. So the remaining 15,000 is what we have written here as short workings written off. Why are we writing off? We are writing off because this is the third year. The right to recover has expired. We can no longer recover the short workings, but at least we are able to be recovering 30,000. The remaining 15 is going to be written off. Now, this brings us to the final column here, which is the payment to the landlord. The payment to the landlord depends. The landlord accepts either of two things. The landlord either takes the minimum rent or the royalty payable, whichever is higher. He takes the higher of the two. So in the first year, the royalty payable is 40,000 according to the output, but the minimum rent was 75,000. So he shall take the higher of the two. He shall be paid 75,000. In the second year, the royalty payable is 65,000, while the minimum rent is 75,000. He shall take the higher of the two. He shall be paid 75,000. In the third year, the royalty payable is 105, and the minimum rent is 75,000, but he has allowed the tenant to recover some of his short workings that he made in the past. So he has allowed the tenant to take 30,000 for himself to recover his past losses. Therefore, of 105,000, having given the tenant 30,000 to cover his losses, he shall take 75,000, which is the minimum rent. Remember, the landlord shall never be paid anything less of 75,000. But in the final year, because the right of recoupment is over, the tenant can no longer recover. The landlord is going to take the higher of 90,000 and 75,000, and he's going to take the higher one, which is 90,000. So this is how you know how much payment is going to be made to the landlord based on the analysis sheet. And now it does not end here. We have to prepare this in form of accounts. So we are going to prepare an account for the royalty payable. We are going to prepare another account for the short working. And we are going to prepare another account for the landlord. Now I have to switch from here. From the analysis sheet, we are going to draw these accounts in the books of the tenant. So these are the books that are prepared by the tenant. In a future lesson, we are going to look at now the books of the landlord. The tenant is going to start by putting the transaction in the royalty payable account. Now I would like us to remember that royalty payable to the tenant is an expense. It is an expense that is payable to the landlord. So the tenant looks at the landlord as somebody he owes money, which is true. He owes the landlord money. So the landlord is a creditor to the tenant. So when we come to the landlord, we are going to credit the amount that he owes him. But when we come here to the royalties payable account, to the tenant, this is an expense to him. So we are going to start in 2017. The reason I insist that you remember it is an expense so that you can know that we are debiting, because an expense is debited. We are going to say the royalty payable is 40,000 in the first year, that is 2017, and it is payable to who? To the landlord. Therefore, our description here is going to be landlord. So that is our first entry on the debit side. Now, to finish the double entry, we have to come here to the landlord in 2017. And we are going to say from the royalties payable, allow me to use the short form for royalties payable so that it can fit. The landlord is supposed to be paid 40,000. Remember, this amount is not enough. The landlord can only take 75,000, meaning there is a short working of 35,000. Again, that short working here represents an expense. It represents an expense to the tenant. So in 2017, he's going to say that he has from his own pocket going to give the landlord 35,000 so that he completes the whole amount that he owes to the landlord, which we are saying is 75,000, because the landlord cannot take anything less than the minimum rent. The reason we are debiting again is because the short working represents an expense to the tenant who is preparing his books. So to finish the double entry again, we are going to credit to this account. In 2017, we are going to say from short working, we have 35,000. So that is the first year. Now, at the end of the year, the tenant will have to pay the money anyway. So at the point he pays the money, we are going to credit his bank account. So I've prepared this as a bank extract because, of course, this is not the only transaction happening to the bank. We are only extracting the part that is of interest to us. In a bank, there would be several other transactions. That is why we call it an extract. So when the tenant pays the money, he's going to credit his bank account. So in 2017, he's going to pay the landlord 75,000 from his bank account. He's going to pay 75,000, and definitely this means that we have to finish the double entry by now debiting in this account, where we are going to say in 2017 through the bank the landlord has received or will be paid 75,000. That is the first year. We can quickly balance that off. So this one we do not balance because it is simply an extract. For the short working, we carry down with the hope that we are going to recover this money in the future. So the tenant is hopeful, so he's going to carry down this amount. He's hopeful that he can recover it in the future. That is in the next year probably. So this one we carry down. And definitely when we come to 2018, it shall be our opening balance. In 2018, it shall be the balance brought down, which is 35,000. Because we are carrying down with the hope of recovering. For the royalties payable account, we write off this cost to the cost of manufacturing every year. So at the end of the year, we simply write off this account to manufacturing. So in 2017, we are going to write off this to manufacturing. The whole of it, 40,000, is going to be written off to manufacturing account. So we have recorded the first year. That is how our accounts will look like for the first year. We can proceed to the second year. Our starting point is the same. In the second year, the royalty payable as computed based on the output is 65,000. So we are going to start here again in the second year. So we are going to say this is now 2018. The royalty payable to who? Payable to the landlord is going to be 65,000. It is not enough. He has to add some 10,000 from the short working. So again in 2018 here, there is the landlord expects us from our own pocket to also add 10,000. Because he's going to receive 65 plus 10, which is 75. When we come here now to the landlord's account, we can finish those two debits into credits here. Remember, every account has to have a debit and a credit. So in 2018, from the royalties payable, we have 65,000. And from the short working, we have 10,000. And therefore, we are going to pay the landlord 75,000. We come to the bank, we pay the landlord. We pay the landlord 75,000. We pay the landlord 75,000 and quickly again come to this account and finish the double entry by paying him. So that is what you do. It is similar to what we did for the first entry. This is 75. So that is the end of that account. That year, the second year. So quickly we go to the third year. The process is the same. Before we go that, let us carry down this. We still have hope because we have 1 year remaining to recover short workings. So therefore we are going to carry down. Now we are carrying down 45. So we are carrying down 45 with the hope that in the final year we may recover, hopefully, in the final year, because the right of recoupment, remember, was for 3 years. So we are hoping that in the last year we may recover. So the balance carried down becomes the balance brought down in 2019. This becomes the balance brought down, which is 45,000. This is our final year. So if we do not recover in this year, we are going to write off the amount in this account. We have agreed that for this account, we write off to manufacturing. So that one we are going to write off to manufacturing every year. So that is complete. We have completed the first 2 years. We have 2 remaining. So let's go to the third year. In the third year, the royalty payable is 105,000. So we are going to start here all the time. The royalty payable in 2019, it is to the landlord. We are supposed to pay him 105,000. 105,000. This time there is no short working. We were able to get enough, more than the minimum rent. We are happy, so we don't have a short working. So we are going to simply take this to the landlord account and finish the double entry. So we come here. In 2019. From the royalties payable, we have 105,000. That is how much we should pay. Now, the landlord is kind. He has given us the right to recoup the short working. So long as we leave him with 75,000, we can recover the amount above 75,000 to be able to offset our losses from the past. Therefore, in 2019, we are going to recover some of the short working. So 105,000, we are going to reduce it by 30,000 and say that we are recovering short workings. Here we are saying recoup. We are going to recoup 30,000. And therefore, the landlord will only be paid 75,000. So again, we come to this account, which is the short working account in 2019, and say that the landlord has given us 30,000. But now the remaining amount out of 45, this is the last year of recoupment, we write it off to the profit and loss. So the remaining amount is written off. So we have to write off the remaining amount because it can no longer be recovered. We can no longer recover that amount. So this account is over. We can no longer recover the 15,000 we have written off. Now let's pay the landlord. Here is where we pay the landlord in the bank. The landlord is going to be paid 75,000. He would have been paid 105,000, but he has given us 30,000 to offset our previous losses as a tenant. So we are going to pay him again. We are going to just simply pay him 75,000. So again, to finish the double entry, we come here and say from the bank, we are paying the landlord 75,000. And we finish that year like that. So we are left with 1 year. Okay, before we go to the final year, this is repetitive. You just have to write this one off all the time to manufacturing to close it. So this one we write off to manufacturing all the time. We have closed it. So our final year now, we are left with the final year. In the final year, the output or the royalties payable is 90,000. So we are going to start there. That is our starting point at the royalties payable. So we are going to say in 2020, the landlord should be paid 90,000. Now that we know what we are going to do at the end of the year, we can still even write this off to manufacturing as soon as now to avoid coming back here later. We can write off this to manufacturing, 90,000. Without forgetting, this we have to take it now to the landlord. Remember our short working account, we are done with this. 3 years expired, we no longer are looking at this. If they make more short workings in the future, we are going to be making them and writing them off immediately. If we make a short working in the future, we write it off immediately because it can no longer be recovered past 3 years. So this account, there is nothing to do here. So it leaves us with these two. So we are going to finish by saying in 2020, the royalty payable is 90,000. And immediately, without any negotiation, because we cannot recover anything, we are going to go to the bank and pay the landlord 90,000. And definitely finish this off by accepting that the landlord has received through the bank 90,000. And that will be the end of the royalties accounts in the books of the tenant. I repeat, these accounts are prepared in the books of the tenant. So if you found this to be helpful, kindly share, like, and also subscribe. Watch out for more. Thank you.